What conclusions can we draw from the current movements in Bitcoin? What could happen next with Ethereum? How to respond to alts? What about my short position from $109,000? How should I continue to manage it, and where do I see the maximum range of Bitcoin's correction? Are we still able to return to the heights even up to 118,000? All of this in today's episode. So what is it about? How should you behave on altcoins right now? How should you manage your trades? And what probability do I currently see in Bitcoin's movements? So my dear friends, without further ado, let's start the episode. So let's begin, my friends, with on-chain data. First up, we have the short-term holder STH-SOPR indicator, which has experienced a significant drop due to this correction. Even though the average purchase price for STH is around 96,000, some of them have already started realizing losses. The question is, what's going on? Is this panic? Are the recent declines causing some people to simply decide, all right, I'll just take what I have, I won't be greedy, I'm just getting out of this market? Time will tell, but for sure, when we move on to the charts later, I'll show you exactly why we don't necessarily have to enter a deeper decline, but rather just a correction of the impulsive move, which could take us even higher. If we look at Bitcoin futures open interest, it also took quite a hit. It seems that people got a little too excited about breaking through $110,000. They decided to exit, and of course, once again, they entered at the top, so the correction knocked them out here. Open interest still hasn't reached a new high yet. With the new high, of course, one was taken out. However, at this point, we are seeing some kind of correction. Right now, open interest is moving exactly in line with the price, so we'll go over to the charts to take a closer look at how I currently see these moves on Bitcoin and how I plan to play them. And most importantly, my dear friends, what about the short position, because I'm still holding a short from $109,000? The realized profit-loss ratio, and here the realized profits have also dropped sharply. But that's not surprising, since a slight drop came and people who weren't prepared for a correction got liquidated. And this is exactly what I keep telling you, prepare yourselves for the most unexpected situations on the market. If everyone is talking about a boom, the probability that we'll get a correction is huge. We can see what 3 peaks in profit realization we've just had. After each such high peak, we had a reading above 3, and of course we experienced a fairly strong correction, just like we are seeing now. Do we still have room for a drop here into the red zone, or will we see a rebound soon? You will find out on the charts. In any case, remember that at every such peak, especially when we're near the all-time high, the rule you should always stick to is to take profits at the ATH. I'm not saying you have to take all of them, of course, but if someone doesn't want to because they're unsure or think it might still go up, then just use DCA, and that's it. Now let's move on to Glassnode, specifically the percent supply and profit. The amount of supply and profit has dropped sharply here by nearly 5%. In fact, I showed you exactly this chart in the last market update and mentioned that from the red zone, the probability of a strong correction or significant drops is maybe not certain because nothing is certain in crypto, but it's highly likely. And here this shows us that in this price range, that is between 104 and 110,000, 5% of the entire Bitcoin supply was purchased, and honestly, that's insane. This shows how many people are completely unaware of how to use charts, how to navigate this world of finance, the world of investments, because how can you even consider buying anything at the very top? You just don't do that. You wait for a correction, and then at most, you buy your bags during the correction. Getting in at the top is basically the same as throwing your money away for good, because those who buy at the top in 90% of cases or more will end up selling at the bottom anyway, simply because they'll get scared by further drops and seeing too much red in their portfolio. So I can see that history just keeps repeating itself. It's an endless story. And now listen, we're moving on to the Bitcoin futures average order size. And here we have a great indicator showing the buying pressure from retail investors, small whales, and large whales. It's clearly visible here that the recent drop we experienced was caused, listen, by the general public, because we see mainly red dots here almost exclusively, which represent retail investors. Most likely, retail investors panicked here after Trump's statement that China is cheating, and they started selling off out of fear of an escalation in the trade war. So listen, it's also worth keeping an eye on this chart, because we can see where the actual smart money shows up and where retail is messing up the whole market, or maybe not exactly messing it up, but simply handing over their money to those who know how to handle it. They know how to invest that money to potentially maximize their profits and avoid getting caught up in buying at the top and running away when the market bottoms out, thinking it could drop even further. And they thought the same way when they were at the top, believing it could still go higher, so keep that in mind. Here, if we look at ETFs, the week was looking good at first, but you could say the last 2 days ruined it, and as a result, it ended with a significant loss. Take a look at the outflows from ETFs. Of course, this is directly correlated with the price of Bitcoin, since interesting things are happening there as well, so here too we see an outflow. Remember that when we have a strong impulsive increase, I'll show you this on the charts in a moment and explain why it happens this way and not otherwise. A correction has to occur. A correction must appear so that the market trend can continue to develop, so that this imbalance can be filled. So what is happening right now, what has happened, this correction, is completely normal. That's why I've been shorting Bitcoin from 109,000 right where everyone was euphorically saying we were heading to 120. And my friends on Forex Factory this Monday, Powell will be speaking. So what will happen today? This week, we'll also see unemployment claims and the unemployment rate. Two events that can indirectly affect the cryptocurrency market. Of course, they directly impact the traditional market, but for us, today at 7 p.m., I invite you to join us on Discord for the live stream because we will definitely be watching Powell's speech live in the Patreon zone, just like we usually do. Every time he speaks, because that's when you can also spot interesting situations on the charts. And since we're talking about charts, let's smoothly move on to what's happening on them. And today, exceptionally, we'll start right away with Bitcoin, because the situation here is really interesting. We've talked about this situation more than once already. Listen, my friends, I've been in a short position since exactly 109.88. You can see the badge on the screen right now showing exactly what it looks like. And here the situation was quite simple because we also played this live on CST Pro around 106,000 to 107,000. I took profit on 50% of the position. Of course, on the lower time frames. Here, on this impulsive candle, we saw a bit of indecision. At the moment when we broke through the value area high, I added that remaining 50% and moved my stop to break even. So now the position is fully secured. We also did a live session on Discord where I mentioned that around the 0.5 level, because it's worth noting here, we can already remove this because it was important to pay attention to this fair value gap and the point of control, which is a very significant area from this entire cluster from swing low to swing high, where we received very strong support. And of course, it was possible to hedge there as well, for example, by securing the position with a long hedge on Bitcoin. At this moment, my position is still set at break-even, actually even at a slightly positive break-even just in case. I think I even have my stop loss set at 108,756 now, so even if it gets triggered, we'll still be in profit. However, at this point, if we don't return to the value area high, which is 106,838, and break through that level, ideally with volume, then we could actually see some continuation here. I think that for now, not lower than 102,000 or at most 100,500, because this entire order block that has formed here, this whole zone, is quite important. So if we actually want to continue the upward movement, which I still support, then a drop to around 100,500 is possible. From there, probably from this area, I'll slowly start accumulating longs to hedge my short position as much as possible. And possibly, I still see a move up to 118,000, which is definitely possible. Just remember that for now, looking at this, listen, we had such a strong impulse with really minimal corrections because those were corrections that didn't even reach 38% of the move. Even if we measure it, check it on the full fibs, we didn't even get 38% corrections here. It was only really here that we got a 38% correction, and only here did we get a fairly strong correction. Almost, you could say, an overbalance was nearly reached. So at this point, the trend clearly shows us that it has flattened out and the momentum has slowed down. On the oscillators, we dropped below 50%, which could indicate the beginning of some kind of internal downward trend, but is not yet confirmed on the macro level, where we would actually be moving down to those lower levels. But remember that in reality, all these fair value gaps that we created here, that is, on this impulse, on this one, and on this one, well, this one is already filled, so we should fill this one and this one. For me, the most reasonable drop on Bitcoin, the kind that could actually give us that new ATH and a very likely liquidation that will simply be taken from us, that's around $90,000. Keep in mind that, in reality, from the current price, that's only a 15% move. How many times has Bitcoin already shown you that making a 15% move in a single day is no problem? Of course, we're not saying that this situation will happen with 100% certainty. Of course, we're not saying that we're just waiting and it will happen tomorrow. Keep in mind that you may have to wait weeks for these types of situations, but this game is not for the impatient. This game is for patient people. This game is for people who have a plan and stick to it consistently. So if you're asking about my plan, I won't hold my short any longer than around 89,000. And again, just as I was shorting and am still shorting because I also have spot bought here from this drop. Similarly, when I see a good entry for a short, in my opinion, I will simply hedge it with very tight stop losses, meaning I will hedge it with longs in places that are high probability trades, that is in spots where we should see a strong rebound. And there, I probably won't hold those hedge longs forever, as they say, but instead, with each rebound, I'll take profits to increase the total gain from managing this short position. However, here I'm saying that on Bitcoin, in my opinion, we should fill in a bit of this imbalance that has formed here. Of course, the trend looks very good, very strong, and above all, very powerful, because up to this point right here, we haven't had a correction larger than 0.382 on the Fibonacci scale, meaning no more than 38% of the move. However, something is starting to happen here, so we could expect some kind of pullback, but it's not certain yet. We might just take out that 118 level. And I'm rather in favor of us still reaching that level and possibly building a stronger correction from there. Besides, if we look at ETH, I'm still waiting for the right level to catch a long position. As you can see, around $2,400 and around $2,140, I will be trying these internal longs, not some big macro swings, just internal longs on Ethereum. But here, you have to keep in mind that this long is very risky. Here we have a structure, here we have a kind of consolidation at this top, which may not hold, of course, depending on Bitcoin and on the money flow from BTC to ETH, which for now has also broken out here, but there isn't any significant sustained movement. I would even say that these 12-hour candles here look quite bearish. In any case, the main area on Ethereum here, which has the highest probability of playing out positively, is around $2,150. That is, the largest fair value gap, the biggest filling of the imbalance from this upward impulse, essentially the key level. This is the area with the highest probability and the biggest high probability zone when it comes to Ethereum. Additionally, here we have, a very strong horizontal level, so there are several confluences here, primarily liquidity confluences, which are the ones I pay the most attention to. Along the way, we also have the point of control and the global value area high, so we really have a very strong magnet here, specifically from 2,250 to 2,146, when it comes to a price magnet for Ethereum, making it likely that the price will tend to move in that direction. And here, in my opinion, this correction should appear at least to the 61% retracement of the move. Even if we measure the entire impulse, an additional confluence here will be the golden pocket at the 0.5 level, which is roughly a 62% retracement. In my opinion, this is a super strong high probability trade zone, and I will definitely be trying to catch Ethereum here, not only for longs, but I'll also be trying to buy this project on spot for swing longs. As for the so-called SUs, that is Phantom, we have filled the most important level of 161% of the move measured from the swing high, meaning the entire extension of this move here. If Bitcoin allows it, and we really don't see heavy pressure on altcoins, then Phantom could bounce from this 39-cent level back up to at least 47. However, I believe that the 35-cent level, rounded, is still very much in play. I think we could see a liquidity sweep, a so-called liquid grab down to those 35 cents. So listen, it's worth setting some abstract price levels for this project. If someone wants to catch it at a good price, if someone is considering long-term holding of Phantom, then indeed 35 cents is the level to look at. Although I think, now I'll tell you Phantoms too, in any case, altcoins are currently very much at risk because of the situation on the market due to the dilution I talked about in the last episode with Piotr Ostapowicz. You have the link up here on the screen now to my episode with Piotr. That is the episode where Piotr interviewed me on his channel, and also my latest episode on my own channel. You can see me asking Piotr about what he thinks is happening on the market, and here these altcoins really are at risk. So if someone isn't mentally prepared for the possibility that even if they buy at these low prices, they might have to hold on to these altcoins or a particular altcoin for the coming months or maybe even years. So at this point, I would approach the altcoin market very, very cautiously. Those who are in profit and actually bought at those lows should take some profits, even though for some projects we're still at valuations practically from the bear market. I still believe that altcoins will break out upwards. I'm not saying that this breakout will be at the level of 20 times. Rather, a breakout at the level of 2, at most 3 times, is what I will fully take advantage of, and then I'll wait for the bear market to simply buy in again. Because remember, it's really during the bear market that you make money. That's when you buy Bitcoin, Ethereum, or your biggest projects simply at low valuations. And here, honestly, if you look at the rest of the altcoins, they're in very strong demand zones. We'll see how long that holds. Generally speaking, at this moment, I wouldn't take too much risk. Of course, as I said, we've caught liquidity in the main zones, but that doesn't mean these projects can't drop lower, because it all depends on how money flows into altcoins, and most importantly, which ones. Because with such a diluted market, it may turn out that a lot of money keeps flowing in, but it's spread across so many projects that we simply don't feel it in our biggest ones, so you have to be careful about that. Honestly, at this point, I would focus on Ether and Bitcoin when it comes to potential spot swings. When it comes to the futures market, obviously you can trade everything, because right now with altcoins, in terms of swing trades on the futures market, we have some very good spots. We've reached those liquidity levels that we've actually been waiting for weeks to hit, so you can confidently take swing trades here. I think we'll be doing this live on Discord, which I warmly invite you to join. And now, my dear friends, let's move on to the weekly report and, of course, the news. So listen up. The American stock exchanges ended the shortened week with gains, although there was some selling pressure towards the end of the week. The Nasdaq Composite Index gained 2.01%, the S&P 500 rose by 1.88%, and the Dow Jones Industrial Average increased by 1.60%. Smaller indices such as the S&P Midcap 400 and the Russell 2000 also recorded positive returns, although naturally weaker. The gains were driven by President Donald Trump's decision to delay the implementation of 50% tariffs on the European Union until July 9th, as well as swift trade negotiations. However, the court's ban on the use of global tariffs by the Trump administration, followed by an appeal and the temporary suspension of that ruling, caused fluctuations in the market, which I will discuss in more detail in a moment. Comments about a deadlock in trade talks with China, as well as unconfirmed reports of a breach of the preliminary agreement with China, further dampened investor sentiment. So once again, it's unclear what Trump is up to with these tariffs. Inflation in the US fell to 2.5% in April, the lowest level since 2021, but it still exceeds the Fed's target of 2%. Minutes from the Fed meeting indicate that concerns about rising inflation persist due to uncertainty in trade policy. Consumer confidence, on the other hand, increased after trade tensions eased, as confirmed by the Conference Board and University of Michigan indices. Treasury bonds gained after a court ruling against tariffs, and the auction of 7-year bonds attracted significant interest. But let's move on, my dear friends, to tariffs for a moment, because this is currently the most important topic. On May 28th, the U.S. Court of International Trade issued a landmark ruling that blocked the implementation of most of the tariffs announced by President Trump, finding that he had exceeded his authority by invoking the International Emergency Economic Powers Act, IEEPA, of 1977. The court found that this law does not permit the use of tariffs as a tool to counter economic threats such as the trade deficit and the fight against fentanyl. The verdict immediately annulled Trump's orders regarding tariffs introduced from January 2025, including a 10% minimum rate on imports from most countries, 20% tariffs on goods from the European Union, and 35% on goods from China. However, listen, the decision does not cover tariffs in sectors such as the 25% tariffs on steel, aluminum, cars, and car parts, which are based, among other things, on legal grounds. The Trump administration, of course, announced that it would appeal the court's ruling, as confirmed by statements from White House representatives, including 𝗕𝗏𝗂𝗧, who claimed that the judge's decision would be overturned. The administration is considering various options, including other legal grounds for imposing tariffs, such as Section 301 or 232, which had previously been used to impose tariffs specifically on steel and aluminum. Experts, point out that if the appeal is unsuccessful, all tariffs collected since April 2, 2025 may be subject to reimbursement, which would mean, or rather would cause, significant disruptions in U.S. trade policy. For now, however, the federal judge has suspended the ban for 14 days, thereby giving the Trump administration time to appeal these rulings. My dear viewers, PZU, this is very important information because PZU, the largest Polish insurer, has announced the launch of a new investment product, namely the InPZU Bitcoin Fund, which is designed to replicate the rate of return on Bitcoin. I'll repeat it once more. I mentioned this recently, but I think not everyone heard about it, and it's quite an important matter when it comes to Poland. The fund, which is scheduled to launch on August 28, 2025, will be the first financial instrument in Poland to offer investors pure exposure to Bitcoin without the need to use cryptocurrency exchanges or currency exchange offices. And the decision by TFI-PZU stems from the growing interest in cryptocurrencies among Poles, as well as the global development of crypto funds. And that's all for today, my dear viewers. Thank you very much for watching this episode. Join us on Discord. If you enjoyed the episode, give it a thumbs up, subscribe, and hit the bell so you don't miss future episodes. And I'll see you on Wednesday, and of course every day during live training sessions on Discord at CST Pro, so take care. Thank you very much. See you and have a great Monday.